What is going on, everybody? Welcome back to Trading Learning 101. Today's video we're going to do a book review on The Secret Science of Price and Volume by Timothy Ord. To start things off, I really loved this book. It's been a while since I've had a good read with a book like this. The last time I had a good read related to volume in the stock market was back when I did a book review on Anna Culling's A Complete Guide to Volume Price Analysis. If you're interested in that video, I will leave a link for it in the video description of this video. So a lot of stuff to cover in this video. I do think you guys will enjoy this video. It took me a while to gather everything together and put this video together. I put a lot of hard work into this video, so I think you guys will enjoy it. If you're new to the channel, make sure you guys hit that subscribe button, join the Trading Learning 101 community where we all grow as traders. And without further delay, let's jump into the book review, everybody. This is Timothy Ord's official website. I will leave a link in the video description of this video if you guys want to check this website out. And we will come back to this website later on in the video. So in this brief introduction here of Timothy Ord, they mention Richard Wyckoff. In the book, The Secret Science of Price and Volume, Timothy Ord does talk about Richard Wyckoff, studying his work and giving Richard Wyckoff credit, and then explaining that he further expanded Richard Wyckoff's work into his own strategy. If you're interested in Richard Wyckoff, I am currently making a video on Richard Wyckoff. He is one of the founding fathers of technical analysis, and I have a couple websites here mentioning the Wyckoff method. Investopedia giving an example of Richard Wyckoff's work. Accumulation before a breakout, and then reaccumulation, and then the markup and the correction. If you don't know about Richard Wyckoff, it's very interesting in the work that he's put out. Many people follow Richard Wyckoff's work, and it has a big cult following. So if you're interested in these two websites that I have here, I will leave links to these websites down in the video description below. And then if you're interested, Timothy Ord also has a Twitter handle at Ord Oracle. I'll leave a link to his handle down below in the video description. He still posts regularly on Twitter, and he posts many examples of his work. And here are some pictures of just many examples of his work. He mainly follows gold in the S&P 500. This may look a bit confusing to you, but he explains it all in this book. Now, the strategy that Timothy Ord focuses on in this book is titled Ord Volume. O-R-D Volume. Ord Volume, in my view, is pretty neat. I'm just going to read some notes that I've taken while reading this book. So in case you guys are noticing why I'm always looking down, I'm reading from my notebook. Ord Volume, in my view, is a pretty neat strategy that Tim Ord has put together in this book with many chart examples. What you're doing is tracking the average volume on swing ups and swing downs to see strength. When a stock breaks higher or lower on high energy or low energy. So with this picture, we're going to look at an example of the Ord Volume. Now, Ord Volume is taken away from Richard Wyckoff's studies, just further advanced. And what Timothy Ord has done is he's taken the average volume taken from swing ups to swing downs. So we see right here on this swing up right here, it had an average of 39 million in volume. And then on this swing down, it had 52 million in volume. And he calculates the average volume on swing ups and downs, and he notices if volume is increasing or decreasing as the stock swings up and as the stock swings down. So he'll track volume on the swings, and he'll also look at the volume subgraph right here. If a stock on the chart, it doesn't matter what time frame you're looking at. It could be a yearly, a daily, a weekly, monthly, 60-minute chart, 10-minute chart, 1-minute chart. It doesn't matter. It works on all time frames. Now, when a stock makes a high on a chart on significant high volume, when a stock pulls back and has a swing down, you want to note what the volume was on that swing up to the new high and the volume on that swing pullback down. And then if the stock breaks up to a new high on the day or just a new high on the chart, noticing the volume. Is it breaking out on higher volume than the previous breakout? If not, then it could be a false breakout. I hope I was able to explain that for you all to well understand what it is. I'm going to go over more examples of what he was talking about, but as I was reading the book, I really liked how he put it together and just broke it down step by step, and then he just kept going over example after example after example, applying the same concept to many different charts to give you an idea of his strategy. And then a quick note, the book does not focus on price action trading. The book focuses on volume and indicators. Timothy Ord talks about many indicators in this book. When he got to the indicators in the book, I found myself zooming through those indicators because I'm not an indicator type of guy. I'm more of a price action and volume type of trader. So I really don't care for indicators. Timothy Ord preaches volume is energy many times in this book. Without volume, you have nothing. You want the wind at your back, as he would say. I also like Tim Ord's strategy. He shows you in this book how he picks stocks to trade. First, he breaks down the S&P 500, the NASDAQ, and then if the S&P 500 and the NASDAQ is bullish, he will trade. If he thinks it's bearish, he will wait on the sidelines. If it's bullish, then he'll move on to the sectors. And he'll look at all the sectors and break down which sectors are the strongest. And then from those sectors, he will pick the strongest stocks in those sectors. That's how he trades. Breaking it down layer by layer. Here is another example that I want to show you guys. Determining buy and sell signal using Ord volume. Sell signal triggered by Ord volume. A sell signal is triggered when a stock hits a minor new high and the Ord volume on the current upswing shrinks by approximately 50% or greater compared with the Ord volume of the previous up leg or down leg. The stock then closes below the previous high. Both conditions determine the stock is in a weak position. This triggers the sell signal. Confirmation of a top is produced when Ord volume increases by 50% or more on the down leg after the top compared to the up leg going into the top. So right here, this is what he's talking about. Right here, we have our up leg up to the high of $50, and it did it on an average volume of 100 million. Stock pulled down. This is the swing down right here, and it swung down on an average of 100 million in volume. Now when the stock made its next upswing right here and it made a new high at $50.25, the average volume right here, 50 million, compared to the previous upswing where it made a new high here at $50, shrunk by 50%. So it broke to an all-time high here at 50.25 on less volume, 50% less volume than the previous upswing. And then the stock came back down on this downswing and closed below the previous high right here, showing weakness. This was a good explanation and a breakdown of what Ord volume is. I think that this is a pretty cool strategy, and I found myself while in the markets, focusing more on average volume and volume itself when looking for stocks to trade. I am a believer and a big believer in this strategy, and I'm going to continue practicing this going forward. I'm not going to continue practicing it the Tim Ord way. I'm going to take what I like from it and develop my own trading style and strategy with this. I do like his concept of taking the average volume on the upswings and the downswings and comparing and looking for weakness. This may look a bit confusing to you, but when you're reading the book, he just goes over example after example after example after example to just like burn it into your head, which I really liked in this book. If you're interested in this picture right here, just go ahead and take a screenshot. This is the best explanation of Ord volume that I've found on Google, and it explains it very, very well. Tim Ord does have a system that he charges for Ord volume, and then the Thinkorswim indicator guy who sells all of his indicators, I know you all know who I'm talking about. He also created a Ord volume Think script for Thinkorswim and has it on his website and selling it. But do you need to buy it? I don't think so. I mean, sure, it'll probably save you time, but there's nothing like putting in the actual work when looking at charts. That's just how you're going to get better naturally. And then we have an example right here with the stock climbing up right here with increasing volume. And then when it makes a new high right here, it does it on significantly less volume. And then we have this big volume surge here, this big sell-off confirming the top, and volume switches to the downside. And then down the stock goes. This is just stuff he talks about and preaches in this book over and over again. And then here's another example right here. This is a great example of what he's talking about in the book. All these volume averages right here, these are all from the swing downs. Stock swings down, an average volume of 115 million. Stock swings down here at an average of 110 million in volume. Another swing down here, average of 108 million in volume. Stock swings down again on an average of 105 million in volume. What's going on? What's the pattern? Volume is shrinking, which is telling me the selling volume is decreasing as the stock swings down. The sellers are getting weak. They don't have enough energy to push through the support, and it did a little bit right here, but then it came right back up and off it went. Same thing right here with this resistance. Stock had 115 million average in volume on the upswing, then 110 million, 108 million. Energy is shrinking. So think of it as, I refer to support and resistance lines as if they're trampolines. They're not concrete walls where if it just hits it, it's not going to go through it. With stocks, it will have some elastic to it and go through it a little bit and come back down. And thinking of that resistance and support lines as trampolines, that's where that energy bounces and you get that momentum. When you have energy dying down on these upswings, you're not going to have enough energy to push through that resistance. Traders are going to get worn out and the stock's just going to fall all the way down. That's what these examples are showing. The average volume on swing ups and swing downs, noticing the volume when at resistance and support levels. Again, take a screenshot of this picture, study it, apply it to your charts. You'll see it happen. I'm really glad I found these images on Google. And if you want to see similar images like this, just type in Ord volume on the Google search, hit the images, and all of this stuff will pop up. Here's another example from Timothy Ord. This is like a picture right from the book. It's not colored in the book. It's black and white in the book. But this is something that I found on the internet. There's many of these examples in this book. A lot of indicators in this book. Some indicators that he goes over is the McClellan oscillator, the MACD, the PMO, price movement oscillator, the NYSE summitation index, and the stochastics oscillator, the NYSE tick. He has a lot of indicators that he follows and he covers in the book. And like I said, when he talked about the indicators, I just quickly ran through those sections in the book because I'm not too big of a fan of indicators and following indicators. But this is an example that he would have presented in the book. And for an example, this is a monthly chart. You see the stock just had a run up here. It found resistance up here. And then he's observing the volume. Volume is decreasing. Sell volume is decreasing. And you would plot out where the high was. Notice the volume. Plot out where the low was. Where the big surge in volume. Notice how much it is. You could see right here, this little support line, and then this wick broke through that support, and it did it on less volume right here compared to right here. That's showing strength. Spotting stuff like that gives you an edge, and that's what he teaches you in this book. And this is why I love this book. He's teaching you a good practice to burn into your head, showing you many examples and just showing you the littlest details that a lot of people just won't show you. This is going to be a very long video. I'm sorry guys, but there's just so much to go over about this book, and I really loved this book. I cannot say it enough. I've mentioned it to a few of my trading buddies in my Discord chat room that I love this book, and I'm sure they just got tired of me every day ranting and raving over this book, telling them it's a must read and a must own. This is by far, out of all the trading books that I've read, I really loved this book, and it's definitely now in my top 5 of all-time favorite trading books that I have read. This will be the last example we'll go over, and then we'll jump into other little topics before I end this video. And it's going back to noticing when a stock makes a low right here and on the volume that it made. And when a stock retests a low right here, and then when the stock runs up, and when it comes back down to that support level, noticing the volume right here. It's significantly less volume than what it made here, so there's going to be no energy to punch through that support. Volume punched through it all right here, but then it was just hovering around and still no volume increase. And when it finally did increase, notice the line that he drew right here, connecting all the way back to where it found support right there, and volume still couldn't break up and above way over here. So there's no energy driving that price lower, which leads to a false breakdown, and spotting something like that separates you from the sheep. It's a false breakdown. People don't see it. People jump in, short the stock, and then when it starts to curl back up and volume is increasing on the buy side and it breaks through right here with positive bullish momentum, shorts have to cover their positions, buyers come in, it's a double whammy, it's a short squeeze, and then boom, price rockets up, and on extreme volume and energy right there. Noticing stuff like that, I love how he put that in this book, broke it down step by step with many examples. After reading this book, I found myself analyzing volume more and more effectively, and doing it every day, I'm going to get better and better. So I highly recommend this book, guys. It's a must read. It's a must own for a day trader, a swing trader, long-term investing. If you love doing technical analysis, you have to get this book and read it. I'm telling you. I'm not going to give you and show you guys bullcrap. I'm not. I'm only going to show you guys the best. This is why I read a lot, to find this stuff and present it to you guys. Show you what's good out there and what's bad out there. I've done many video reviews of trading DVDs, books. I have playlists on them. I have it all laid out for you guys to show you what to read and what to stay away from, because there are a lot of fraudsters out there. And then next, I have some quotes from Richard Wyckoff that I found that I thought you guys might like. The first one's a little bit hard to read here, but it says, "Listen to what the market is saying about others, not what others are saying about the market." So what he's saying, there's a lot of noise out there. You see it on TV, you see it on YouTube, you hear about it at work. There's a lot of noise, people talking about what's going to happen in the markets. Nobody knows what's going to happen. Nobody can successfully 100% predict what's going to happen in the future. So learn about technical analysis, do your own technical analysis, and go off of what you believe. Forget what everybody else is saying, because they don't know. And then the last quote here by Richard Wyckoff: "There are those who think they are studying the market. What all they are doing is studying what someone has said about the market, not what the market has said about itself." What this quote is saying is, you're watching CNN or CNBC and people are talking on that show that a recession is happening and is about to happen at any moment. So what you do is you go and look at charts, and you're using what they said on CNBC about recessions, and you're looking everywhere for that clue that a recession is coming. And sure, you may find a couple, but you're going off of a belief of what someone else has said, instead of coming into the market and looking at charts with an open mind, actually listening and seeing what the market is telling you. There's a lot of wisdom and knowledge in what I just said there, and I hope it makes sense and you actually understand. If you understand what I just said and believe what I just said, hit that like button, and down below in the comments, type agreed to let me know who my dedicated viewers are, and so I know that we're on the same page. Now, going back to Timothy Ord's website, I will leave a link for it down in the video description like I said, but Tim Ord also has a software that he tries to sell. If you go to the software right here, he talks about the software, what it is, and then if you go to the purchase online, this is where I think it gets a little crazy. For $600 and 6 months, he's trying to sell you the Ord software. It's either with the newsletter, it's $500. Without the newsletter, it's $600. Now, do you have to go out and get this? No, I won't get it. From reading his book, it's opened my eyes to what to look for in volume and different strategies, but it's an option that's out there. If it's something that really intrigues you and you really want to look into, it's out there. And then same thing goes from what I said earlier. The guy who makes and creates all the think scripts and tries selling them online, he's done the exact same thing as Timothy Ord. And here's an example of it right here. And he's on here selling it for $90. So if you have Thinkorswim, if you're interested in it, there's options out there. But I'm just going to use my own way and strategy of looking at it. I've taken a lot away from this book, and it has improved the way I looked at charts and the way I look at stocks before I trade them. I've been testing this strategy the past couple weeks. and I've been seeing a lot of sense of what he's mentioned in this book. Now, using my strategy of price action and volume and at mental price levels, I'm going to continue being a scientist and a detective. Testing, refining, testing, and putting the pieces together. That's what it's all about. And this is why I love reading all of these books, watching all these trading DVDs. I take the best of what I want or what I see from traders, and I develop it into my own strategy. And I make my own playbook. And then when I jump on YouTube, I type in Timothy Ord. I try to find him on YouTube to see if he has a YouTube channel. I do not see that he has a YouTube channel, but he has a lot of videos out here on YouTube that he has appeared in. From stockcharts.com, Benzinga, and another one that I found him on, and I'll leave a link to this as well, is the Wyckoff Trading Academy. There are all kinds of videos in here with Tim Ord himself talking about Ord volume and showing you his strategy in these step-by-step videos. You could see I've already watched a lot of them right here when I click on the video tab. If you're interested in it, I'll leave a link to it. And then if you're interested in purchasing the book itself, I'll leave a link to the Amazon link down below in this video description. On Amazon, there's 13 ratings on it on Amazon, and people have given it 3.5 out of 5 stars. Me personally, out of 5 stars, I would give this book a solid 4.5 stars out of 5. I absolutely loved this book. For a hardcover, you can get it for $63. You could scroll down and see what other people are saying about this book. 40% give it 5 stars, 25% give it 4 stars, and it looks like 35% gave it 1 star. Go through here, see what other people have to say about this book. My review is only one opinion. So if you need more validation from other people who have read this book, check out the review section on Amazon. I hope you guys did enjoy this book review of The Secret Science of Price and Volume by Timothy Ord. Again, I give this a 4.5 stars out of 5. If you're new to the channel, hit that subscribe button. Join the Trading Learning 101 community where we all grow as traders. I love doing these book reviews and making all sorts of fun videos related to finance, the stock market, day trading. I love this community, and we're growing more and more every day. That's going to wrap it up for this one. Again, I hope you all enjoyed this video. If you did, hit that like button, leave a comment down below, and as I always say, have that patience, have that discipline, and study, study, study. Later, everybody.
The most valuable commodity I know of is information. Wouldn't you